Will the market sell the news next week? Hello everyone, this is Ahmed Saleh and this is a weekly market recap. Market rallied last week and achieved a new all-time high thanks to the CPI report and the employment data. The market is now pricing 3 rate cuts this year. The first one is next week. Now, will the market sell the news next week? We have an important concept called buy the rumor, sell the news. Will this be achieved this week? Watch this video till the end to know the answer. And as well, I will be reviewing the stocks that we shared last week, and I will be adding more stocks to them in this video. And now to the details. The market last week was performing very good. We have the S&P increasing by 1.6%, Nasdaq increased by 2%. The year to date is doing great, 12% year to date, 15% on the Nasdaq. So things looks very well, and mainly last week performance was due to the CPI, which came as per the expectation at 2.9%. Job market was weakening further. So this gives the indication that Fed will reduce the rate and the probability of the next rate cut increased to 100%. Not only that, but the market is now pricing 3 rate cuts, one in each of the meetings that we will have until the end of the year. So this was mainly the reason for the market increasing, but we can see some weakness that is happening because there is no breadth in the market. If you look at the S&P equal weight and the Russell 2000, it had a modest gain. And because of this, we see that the strength of the market is just focused on the mega companies, and that's an issue. Ideally, we want to see all the companies participating in this rally. Now, we have an important concept called buy the rumor and sell the news, which is mainly that you expect the company will split, for example, or the company will get good price. You buy ahead of that, and then when the actual results or the actual split happen, then you sell at that point of time. And this is called buy the rumor and sell the news. Most of the cases, this is happening. So market is expecting that the Fed will reduce the interest rate next meeting. Now, I would not be surprised if I see the market going down. Okay? Because most of the people who bought prior to this announcement will sell at that point of time. Now, it all depends on what Jerome Powell will say in that meeting. Will he confirm that we'll have more cuts this year or not? If he says anything that indicates that we will not have a 3 rate cut this year, then most probably the market will go down as well. Last week, as you can see, 4 out of the 5 days were up. Really, it was a great week. And the market now is at all-time high again. September, we asked the question last time whether September will defy the history. So far, yes, it is. Historically, September is the worst month in the year, scoring on average 2.2% in the last 10 years. Now, this September is 1.9% gain. So far, it is defying the history. Next week, as we mentioned, we have the Fed rate decision on Wednesdays. There should be no surprises, but let's see what Jerome Powell will say in the conference call. My trading strategy is I am tightening the exit to protect the profit that happened throughout the last few weeks. And even if you have break even or you have small losses, just tighten the stop loss so that you don't lose more. I'm exiting as well the margin so that I am not exposed to the market. Still, my 2 strategies will be the same. The stocks that are breaking 52 weeks high or all-time high, and the stocks that are rebounding from key support. Let's review together what happened to the 7 stocks I mentioned in the last week, and I will add few stocks on top of them. So the first one is Seagate, an amazing performance, plus 4.2%. It's doing well, it's going fine, and this is what I call an easy trade. Why it's an easy trade? Because there is no big drops that happening throughout the journey, and you can see that the ATR is going down. You can refer back to the video that I will put at the end on the importance of ATR. Next one is GDX. This is the gold miner, and it is as well a very good easy trade, I would call it. DHI, it didn't go down a lot. It went down by 2.1%, but I would exit this position. Why? Because the market is going up. The market is achieving 2%, and you have seen the previous 2 stocks, they are achieving plus 4%. Now, if you see that your stock is underperforming the market, you should exit that stock, even if the losses is small. Actually, this is a good opportunity to exit while the losses is small. So I would exit that position. KGC, again, related to gold, doing very well. And as well, it's an easy trade. There is no big fluctuation that will get you out. Next one is the gold itself is going up by 1.2%, not bad at all. Next one is a CrowdStrike. This is a strategy of reversing from support. The previous one were the all-time high or 52 weeks high. So this one is reversed from support. We talked last time that we have the 200 days moving average and we have a support about 400, and we have seen that it is reversing every time that it touches the 200 or the $400 mark. It went up by 4.3%. It's doing very well so far. We have a resistance at 450, which coincides with the moving average 50. So it's a very strong resistance. Let's see if it will manage to break it or not. Next one is Grail. Grail went up by 2.5%, but this is what I call a tough trade. Why it's tough? Because the stock went down. You see this point, the stock went down with about 6-7%. So most probably you have gotten out. If not, then you stay in and you tighten your stop loss here. Next one is Sound, minus 1.1%. It's not that bad, but it is underperforming the market. So I would take care of that. I would just put a tight stop loss and exit the position if it's not doing well. So now I'm adding few stocks just for you to keep an eye on them. The first one is Rocket Lab. Rocket Lab is doing a cup and a handle. You can see here very clearly. Here is the cup and here is the handle. And there is a break of the handle, the right side of the handle. Now we need to see if this is going to be confirmed or not. If it's confirmed, then it's a good sign to go in. Next one, Ethereum. So ETHE, you can buy ETHE, ETHA, or ETH. They are all the same thing. And we can see that we have here a double bottom. And this double bottom here is a good sign of a rebound. And if we break the 38.5 or the 40 here, then we have a big possibility to continue going up. Next one is AB. AB had a problem before on some fruit cases. Some of the company was recommended to short it because they were saying that it is playing in the results and the numbers. But last week it was announced that it's going to the S&P 500 index. And if the company is going to the S&P, then most probably they have done the research on them and they have found out that these fruit claims are not realistic. So now the stock is rebound and it's going up. So it's a good sign to go in the stock right now. Next one is the KWIB. The KWIB is the ETF that is following China market. And now it is like going to 52 weeks high and is doing very well. So maybe it's a good time to go in this. Maybe we're gonna see a change in the China market. So you can go to the China market through the KWIB. And just to show you the potential on this one, if we look at the previous year, you will see that the potential is huge. That's why the China companies are very cheap relative to the US. And if we break here the 42, we might go to the 50, and from the 50 we might go to the 60. So the potential is huge. We have a 50% potential here. And it looks like the consolidation that was happening in the last 3 years is now coming to an end, but we need to break the 42. So it's a good trade to do. That's it. Thank you very much. If you have any question, you can type it in the comment, and please press like and share it with your friends. Subscribe to the channel. And this video is for educational purpose only and should not be considered as a financial advice. Any investment you make is at your own risk. Thank you very much. This was Ahmed Saleh.